1 minute, 1 minute. All right, good afternoon, everybody. Today is Tuesday, March 21st, 2023. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got out of my snap position into the up move today. Lightened up a little bit generally into this up move on my longs into the Fed tomorrow. Pretty sure that every position I'm in is lighter than it was yesterday. So let's go to some charts. Look at this GameStop. Up 34%. No guidance yet, but it looks like a pretty solid beat on the initial numbers. Yeah, not bad. Beat on sales, beat on EPS. Beat solidly on EPS if I'm reading that right. They had positive EPS of 16 cents when they were expecting a loss of 15 cents. Am I reading that right? Maybe it's from the sale of those digital assets that we're getting there. Yeah, that's a sick move. 24 is a little bit of a level here too. Stonks are back. All right. Big update for the market today. S&P's up 1.3%. The NASDAQ is up 1.4%. The IWM outperforms, though I think this IWM was disappointing, even though it's up the most at 1.9%. And you know what? Let's even take a look at the Dow. Dow up 1%. So a little bit of a laggard there. Yeah, really strong day today. I did not have a lot of conviction coming into today's trading session with the gap up. You know, what we said was the SPYs getting above this daily shooter here, 2 inside days in a row, is bullish for the S&P. So we're back to small time frame bullishness. And what I said was for more intermediate time frame bullishness, we need to negate this March 9th candle for the S&P. We also need to remember that there was an ex-dividend in here. So really this high is off by about $1.50. So the SPYs closed today at 398.76. So if you tack on $1.50, you know, you would be getting back above this $400, but not fully negating this candle. But we're right around this key level of resistance for the SPYs, where if we can get a little further continuation, it starts to become really bullish. Will we get further continuation? Your guess is as good as mine. We got the Fed tomorrow, and I'll talk about that in a minute. But in some ways, I don't remember ever feeling so uncertain going into a Fed meeting, not just on what they're going to do, but also how the market's going to actually react to it. But yeah, you know, impressive day for the market. The big thing that I wanted to see off the open was how the market handled the upside extension. And we started the first half hour of the day with a beautiful consolidation of the gap up. Full 30 minutes here. ADMA was catching up. Even after 30 minutes, it's still, this is for the SPYs. The IWM was even more extended because the IWM gapped up even bigger. The SPY ADMA still hadn't even caught up. But the market tried to break up at 10 a.m. That failed. False moves lead to fast moves in the other direction very often. So you had a false small time frame breakout on the 5-minute chart here at 10 a.m. That led to a price correction down to the ADMA. I really wanted to see if this ADMA could hold. You know, false break to the upside, shake out to the downside, then continuation. Not that unusual of a pattern. But you also got to pay attention to the time of day. One of the things I mentioned around this time, 10:15 a.m., is when you get these really big gaps, sometimes you need, ooh, Nike just came out, sometimes you need, as soon as the 5-minute is catching up to equilibrium, where you begin to look for continuation, the 15-minute needs to catch up because of how much later in the day it is. Nike trading up on earnings here initially. Up $8 here, up 7%. They beat revenue. Gross margin was light. China was light. Revenue's decent. Interesting that they're trading up on that. We'll see what happens. Nike's one of those stocks I feel like almost always goes up in their earnings reports. There's just been a few occasions that I can really remember when they. So Nike is his company. It's his stock. I do, Rich, in my IRA. I'm pretty sure. Just sitting there, gonna sit there forever. It's not my first ever buy that I did when I was a kid. My first ever buy of any stock was actually Nike when I was like 12 or 13 years old or something like that. Yeah, but Nike's been an incredible stock where, you always pay attention to this one after earnings, and I feel like over the course of my entire trading career, I've only ever noticed Nike go down on earnings like a few times ever, which is just so crazy. This one always seems like it goes up. And so far for the moment here, it's up. I haven't seen any guidance yet. Anyway, back over to the market. So yeah, a lot of times as soon as you're getting that 5-minute catch up, it's 10:15. Well, guess what? At 10:15 is when you a lot of times start to need your 15-minute chart to catch up. The 80 EMA on the 15-minute chart is basically the same as the 21 EMA on the 5-minute. So I could switch over to my 15 if you'd like, but we could just keep looking at the 5, because now it's like, all right, here we are at 10 a.m. We're touching this 80 EMA on the 5-minute for the first time. I'd love to see us begin to move higher, but we really need to price our time correct to that 15-minute chart. So we pulled back further. 10:30, 10:35 is finally when we were at that low. And now you're coming into, for sure, now you're coming into the midday price action. And midday price action is usually when things get sloppy and choppy, especially on the day before a Fed meeting. Very typically the day before a Fed is a more difficult trading session. And as a matter of fact, the morning of the Fed is usually a more difficult trading session. Let's just say that really briefly. Tomorrow morning and obviously there's no 100% in trading, but very typically on Fed days, you'll see in the morning, the first hour of price action, you get your normal price discovery period, and then midday becomes extremely slow because people do not want to be putting on new bets an hour before the Fed is about to announce potential interest rate change. So that's the expectation for tomorrow. Usually midday on Fed days, it's a great day to go for a walk, get some sunshine, manage your positions, listen to a financial podcast, but not really be pressing a whole lot of buttons midday. At 2 o'clock and then at 2:30, we're going to have a lot of volatility and a lot of movement, and maybe a directional move with it. But we'll take that as it comes. I'm pretty sure there's a presser at 2:30. Yeah. So anyway, that's your SPYs. Really strong day here for the SPYs. Really knocking on resistance. But tomorrow with the Fed, who knows what's going to happen? I'm still looking for more mean reversion between the IWM and the Qs. And for the second day in a row, on a percentage basis, I got it. Russell here again up 2%, and Qs up 1.4%. But I'm disappointed by that because intraday, the IWM was actually very relatively weak compared to the Qs. The only reason why the IWM is up more than the Qs are is because they gapped up so much bigger. Russell had a huge gap higher this morning, traded up in the beginning of the day, and then unlike the SPYs and the Qs, which rallied into the close, this thing did nothing into the close. So it actually closed decently off of its highs and has given a little bit of a tail into this 178 area. So again, huge gap up in the IWM. At one point you had the Russell up a couple percentage points, while you had the Qs up, 0.4%, 0.5%, something like that. So to see at the end of the day here, sure, the IWM is still up more, but not to the same degree of mean reversion that I've been looking for. I want these cues just to relax a little bit and let the IWM catch up. With that said, for the second day in a row, I was also saying we should not really be shorting stuff because the cues look fantastic. The chart looks amazing after today. So it doesn't surprise me to see that all the indices are going up together. It's actually very normal. I'm just looking for more outperformance on the IWM than I was actually able to get. If the IWM gapped up as big as it did compared to the Qs, and then for the rest of the day they moved up in unison, so at the end of the day here, I'm looking at this. If that happened, I'd be looking at the IWM almost up 3% with the Qs up 1.5%. That's actually more of what I'm looking for in the rotation here in the beginning of this week. So I feel like I'm right and I'm wrong at the same time. The idea that conceptually is correct on a percentage basis, but as far as the intraday action goes, I'm more on the wrong side of that. And then, same thing with these financials. Disappointed in the lack of follow-through in the financials, but we also said not to buy them or short them today. If you want to be involved in the financials or you want to be involved in the energy sector, you probably need to have that from yesterday or from one of the last couple of days. Big gap up this morning, we were saying takes away a lot of the opportunity. I don't like where the market is to come in and short. I don't like where the financials are to come in and short, though technically, a really weak name testing the ADMA on the daily chart is where you can look to short. I just have a fundamental thesis that these names, particularly these financials represented by the big banks, should continue to go higher. So, my whole approach to trading, even though I'm more of a technical analyst type of trader, I do incorporate that fundamental thought process because, I like having logic with my trading. If things conceptually, logically make sense, and then the technicals can confirm that tends to be when I'm best as a trader. So you really could have even looked at financials as a short this morning on a big gap up into the ADMA, but I don't like that because it runs counter to my actual thought process. I would rather be long the financials and short them, but what we also said was, technically this could be even an area to short, so what it means is it's definitely not an area to come in and do any significant buying. But I'm disappointed with the follow-through, especially you look at Bank of America, which I'm in. Bank of America, that's a gross candle. That's not even good compared to the XLF. That's a pretty weak close. At the beginning of the day, Bank of America was very strong, got up to 29, got up to the ADMA on the daily chart, and then pivoted up there and closed relatively weak. That's not a good-looking candle from BAC. And you can't help but wonder if that's an actual daily chart pivot high. Some of these others, JP Morgan, not great either. It's the other one I'm focused on. Citi here, closing on lows, really not good. Morgan Stanley, I guess, was a little bit better. Wells Fargo, not good. Goldman Sachs, not good. Morgan Stanley, probably the best one out of these. And it's funny that the XLF chart, from a candle perspective, actually looks a bit better than most of those banks that I just went through. So I guess I shouldn't be that disappointed with the financials considering how big the gap was. I personally was just still looking for more. And then you've got this KRE that actually held in pretty decently, representing the regional banks that was up a lot today. So we'll see how that kind of continues to play out. Trade of the day today was probably Google. Just a monster move on this Google, and it's worth reviewing the beginning of the day here for the price action, these first 15 minutes or so, because the call out in Google was off the break of the second candle, the third and fourth candle, because you had like kind of two inside fives in a row there, so you had like a 5-minute shooter. But the big key here, and this is how you want to learn to analyze your intraday relative strength and relative weakness, because like I said, you can look at things on a percentage basis, but that can be misleading. It's not necessarily the stock or the sector or the index that's up more on a percentage basis that is the one that is necessarily trading relatively strong for us from an execution perspective in that moment. So I remember at the beginning of the day here, I was looking at Amazon. Amazon was acting nice and relatively strong early on in the day, whereas Apple was acting, a little bit weaker. That had a pretty nice first 5-minute candle, and I thought Amazon was acting strong. It gave an inside 5 in the second bar. It gave an inside 5 on the third bar. So you had like a 5-minute shooter that came in, This was right now as the Qs here, which were the least extended from the gap because they gapped up the least. The Qs here, moving average is beginning to catch up, but it's too early. So, you know, again, forget about the rest of the day. You don't know that yet. The price action's happening intraday. We're 15 minutes into the day. You don't know the 4th bar, 5th bar, 6th bar, 7th bar, or any of the other bars for the rest of the day. You're looking at this QQQ chart after 3 minutes. Sorry, after 3 5-minute bars, so after 15 minutes. I'm looking at this QQQ chart, and I'm saying it's too early to aggressively start buying stuff. Why is it too early to aggressively start buying stuff? Because this gap is so big, the ADMA hasn't caught up yet. If I'm buying this early, there's a very high probability of a shakeout. Why is there a high probability of a shakeout? Because the ADMA hasn't caught up to lows, hasn't confirmed that low as being significant yet for anything except for a pure momentum trade. So I look at the Qs here after 15 minutes. I'm like, all right, they're telling me that it's not ready yet. I look at Amazon after 15 minutes though, and I'm like, man, I really like this relative strength. I really like this setup here with these 2 inside bars, this tightening pattern. I'd like to be able to go long this potentially on a break. But I'm definitely not going to cheat on this one by buying before the break of the inside 5, and I'm not going to aggressively buy it at all, even though I think it looks great. Why am I not going to aggressively buy it all? Because the Qs are telling me it's not ready yet. I don't want to be fighting the market on my Amazon trade, even though I like Amazon. So of course, what happens now on our 4th 5-minute bar? You look like you're getting a breakdown of the opening range. But guess what? It just shakes out and snaps up really quick right away. That's not surprising at all because of what's going on as far as our understanding of equilibrium with the ADMA. We just get a quick price correction almost to this ADMA that snaps back right away. So you're shaking out all these momentum longs, but getting right back up. And now, by the time this bar is kind of closing out, you don't have that same degree of extension anymore. So now you could go back and you could look at this Amazon that was relatively strong. You never got hurt by trying to buy these inside 5s because you were patient because the market wasn't ready yet. But now you look at this thing and you go, okay, look, it's relatively strong, fine, it shook out these inside 5s, but it just tailed right down to the ADMA and it looks good. So I can try to potentially buy versus that low. Or the even better trade, in my opinion, that we communicated, and I think that this was the trade of the day, was actually what happens in Google. So again, let's go back to the Qs. Let's focus on these first 4 minutes. First 4 bars. Consolidation. 4th bar is a down tick shakeout. Amazon, first 3 bars consolidation. 4th bar is a down tick shakeout, breaking opening lows, touching to the ADMA. Look at Google. First 3 bars. All right, first bar strong. Second bar a little weaker than you want. 3rd bar is an inside bar. Okay, fine. 4th bar. What did the market do in this 4th bar? The market shook out, broke opening lows with a tail and snapped back. Amazon shook out or broke opening lows with a tail and snapped back. This thing didn't down tick. That's very notable relative strength. It was probably at that point of the day up less on a percentage basis than Amazon or the Qs. Definitely up much less on a percentage basis compared to the IWM. So you could look at things like I was saying earlier just on a pure percentage basis and you could say, oh, what's up more on a percentage basis is relatively strong. That's not necessarily untrue, but it's not as significant to us from an execution perspective as recognizing what just happened here. How is it possible that the entire NASDAQ was just able to have this quick downtick, snapback, yet Google must have a buyer here that didn't even let this thing budge to the downside when the market downticked? There's supposed to be a correlation. Google is a huge component of the Qs. There's supposed to be a correlation. This is supposed to downtick when the Qs downtick, roughly. But you recognize that and you go, oh, okay, that's very notable. So now when you got these inside candles that have kind of built up, you go, all right, this is my execution strategy for an entry here. And then this becomes a great long on the 5th bar of the day through 101.88 through the inside candle high where you're looking for continuation. So those are the things that you want to learn to try to be able to pay attention to when you're looking at these different charts on multiple time frames, and we're paying attention to things like relative strength and relative weakness. And then this turned out to be the trade of the day. We had bull flow hitting for Google, bull flow hitting for Amazon, bull flow hitting for Tesla. But this Google, from an execution perspective here, was excellent. I think a bunch of you guys are in it. I hope you all trailed it properly. I hope that, you could have, with a proper trail, gotten shaken out of your long at 1050 to 1055. So you have the pivot low, you have new highs, you have the 80-minute catch-up. You could have gotten shaken out here. But if you didn't get shaken out of your entire position because you're trailing someone on a 15-minute chart, or you're being a little bit greedy by giving some back to your original stop loss or something like that, you easily could have had this Google for the entire rest of the day, getting that move up to 105, and then that's just an absolutely phenomenal trade there. And he's saying, no, I didn't trail the Google. And that is exactly what happened to me, but I just learned. Cool. As long as you're learning. We really want to make sure that we're implementing our strategies for reward maximization. It's so hard to have, good execution consistently across the board and be involved in these right trades, that when you have the right trade, you really want to make sure that you got a good game plan in place for reward maximization, because we are all going to be wrong all the time. We're all going to have failed trades all the time. It's about how you manage your risk and keep the losers tight when they're not working out, but also how you can let things run to potentially be in this Google at 105 at the end of the day. And again, if you got shaken out here at 1050 or 1055, I don't fault you for that at all. This is an appropriate stop as far as I'm concerned, to use the 1005 low if you're keeping it tight. And one of the things that we have to ask ourselves when we're creating our game plan for reward maximization is just how tight do we want to actually keep it? And how tight do you want to keep it? That's going to be oftentimes based on your other layers of probability. Is there a lot of bull flow hitting? Well, maybe I should keep this a little bit looser and try to let it run. Does the daily chart look fantastic? Well, maybe I should try to keep this looser and let it run. Is the time of the day still solid? Things like that. Whereas, I can give an example of one that I kept super tight today, and actually cost me some reward about how tight I kept it. I called out AI. I called out a midday trade today. I don't do that too much. I usually really don't like trading around that 12 o'clock hour. I just find it's a significantly lower probability of success. There's not as much follow-through on trades. But if I was going to take a midday trade, I would want it to be something that has a short squeeze potential, or is in play in such a way where I don't have to worry as much about the market going sideways and being choppy. So AI is that. I'm annoyed at myself because I had done technical research on Path this morning, and I actually had Path in my list that I kind of published to you guys, even though it was a small list, and Path worked great. But I remember when I was typing Path into my list, saying to myself, "Oh, remember to take a look at AI this morning also," and then I never did. So I feel like if I had done a better job with my research, I probably would have had AI 2250 area on my radar, and I just didn't type it up pre-market. So I wasn't involved in this thing when it was, I wasn't looking at it at all anywhere in this area when the volume was coming in, when it was trading better, anything like that. But eventually here at like 12:20, I took a trade in it. 12:20 here, I took a trade in it. Stock is strong. Stock is now breaking out on the daily chart, which we just looked at. It got very ahead of itself here at 11:30. This is a really big move from $22 to $23.20 for just a $20 stock or so over the course of 40 minutes. It gets very extended at that high. It has a technical pullback. It's midday. It shoots beyond the ADMA. It pulls back into equilibrium area. It begins to create this pivot. And then I noticed here at 12:20 that it was beginning to break up a little bit, and the volume was increasing a little bit. And I was saying, okay, this is starting to look like a real pivot low here for continuation on this chart. And the first thing I said to myself was, it's probably going to be too much risk knowing how this stock moves. And I looked at it and I was like, I can get some stock here in like the mid to low 80s right now versus 57 cents as that pivot point. So I could take like 25 cents risk in AI. Yes, it's a $22 stock, so it's a decent amount of room. but it's actually not a decent amount of room necessarily for this name and how it has the potential to move. If this thing wanted to, it could have gone to $27 today. I mean, you can just look at the daily chart just to see some of the big days that it's had in the past, and then you're breaking out of this kind of base here and you're breaking above this resistance. A lot of times that's going to be the day when it might actually have a move where it gets to 25.50 or something like that. So I'm looking at this thing and I'm like, all right, let me get involved with the thought process of a short squeeze, even though I really don't like this time of the day. Communicated it to you guys, you know, now I'm in the trade. And it begins to work. And I'm like, okay, cool. Volume's picking up here at 12:30. My 1-to-1 or so was about, you know, 23.06 or so. So I sold some stock at 23.06. And there's a volume pickup here. And I was trading it with Rich, I believe, if he's listening. And he didn't get his 1-to-1. So you might have had, I guess, a little bit of a worser price than me by a few pennies. Yeah, so you probably had a few pennies of a worse price than me. I basically was, you know, 1-to-1 in the money at 06 or so. You're offered at 13. The high of the move seems like it's 08. And, you know, I start to think about this, the reason why I'm in this trade. Let's get back to that actually in a second. The reason why I am in the trade is because I am looking for a momentum short squeeze. I'm looking for a momentum short squeeze. I really want this type of volume to be coming back in. I basically want a repeat of this move. I'm not looking for a grind name. And it's midday also. So I'm like, all right, you know, Rich didn't get his 1-to-1, and now I'm concerned that the momentum that I was looking for isn't coming in. Let's see if there's a way where we can actually keep this one really tight. Because if there's going to be if this is a momentum trade, it shouldn't be grindy. It shouldn't have a lot of back and filling. Yeah, sure. You know, you get the big move, and then it, you know, price corrects to the ADMA and then continues. We'll deal with that when it happens, because if that was going to happen, this high should easily have broken at 23.20. And I was expecting to see off of this move by the time it's, you know, 12.50 that the stock's at 23.50. That's really what I'm looking for. And then we get one of these mini blow-off tops and it price corrects back down like that. So I'm like, all right, I got the volume pickup here at 12.30. Really, it should never get back below that, or there's a problem. It never made the new high. So we can raise our stop to here, because you had mentioned that your price was 87 cents, so you never got the kick. It's not fully inappropriate of a stop loss. I might say it's partially inappropriate as a stop loss. It's more like you're trying to use more of like an ignition candle as a stop, which I do sometimes, but I don't typically do it as a trailing stop. I don't think it's necessarily wrong either. But the other important factor for me was that the ADMA was above that price. I would not have raised my stop to here if the ADMA was not at least that price. But the ADMA was that price. Let the volume come in. I'm looking for momentum. This thing I'm thinking should never be able to get back below this low. I raised my stop on my position from here to here. That's even with getting my kicks. So for me, it's going to be a profitable trade no matter what. So that's good. And you know, for Rich, who couldn't quite get his 1-to-1, you know, you're not really going to be losing anything at this point either if we trail it that way. And then we got shaken out. You know, the low here is 77 cents, so that stop was very tight, which again I'm kind of fine with because of the reason for the trade. But we got shaken out. It was grindy for the next hour, which again it was not the reason why I was in the trade. And then it kind of picked up when the Qs and the market picked up a little bit, and actually ended up giving, you know, a decent move up to 23.50 that I wasn't able to be involved in it. So I ended up having a very small winner. You're probably more or less break even. But that's just a very separate example of, you know, when you're coming up with your game plan for your trade. That's the whole reason why, you know, I looked at Google and now I'm looking at this. You're asking yourself, how tight do I want my trail to be for reward maximization? Because what you want to be able to balance is you want to be able to balance being able to keep it loose enough to be able to capture an entire move. To be able to capture the Google move to 105, or be able to capture this AI move to 23.50 when it actually happens. You want to be able to capture the entire move, but you also don't want to give back all your profits you know, turn a winner into a loser if you can help it, or turn a winner into even a break-even trade, which at that point, you know, probably would have been a break-even trade for me if I traded it correctly and I you know, gave it down to 22.57. I'm like, all right, well, I'm at least going to lock in a little bit of profit for myself, considering that it's not doing the right things. So that's always one of the tricky questions, you know, just how greedy do I want that game plan to be? A lot of the times what I do is multiple stops, which I'm kind of surprised at myself that I actually didn't do it in this trade, because I usually do not like to keep my entire position tight. Sometimes I will if I really want to just lock in the cash. That's kind of how I was feeling about this AI trade, and maybe I was getting in my own head that I was taking a new trade at 12.30, which I don't typically do. A lot of times I like to use multiple stops. So, you know, if I got a 2,000 share core position after kicking my 1-to-1, I could put a 1,000 share, you know, stop where I'm keeping it super tight, maybe below that 12.30 low, and still keep 1,000 down here. If I get, you know, stopped out of both, it'll still be a profitable trade, not a break-even trade. But if I get shaken out of half of my core, I still have the other half for the bigger move in case that actually happens. So I do that a lot as well, and it's one of the things I like. But you really want to try to balance being greedy for reward maximization, which often means having to give back more open profit in order to be able to do that, with saying to yourself, hey, I really want to be able to lock in this money. And how do you find the right balance is going to be a lot of times based on what those other factors are and what those other layers of probability are. I would say when in doubt, if your risk is covered, to be greedy. That's just a very general rule. When in doubt, if your risk is covered, be greedy. Because when you come back to the root of successful trading, the root of successful trading is very simple. You just got to make more money than you lose. When you come back to the root of successful trading, you can't keep everything tight all the time, because you're never going to have the really, really big winners that make up for the fact that you have losers sometimes. So I would say when in doubt, most of the time, I would actually rather end my trade with my P&L at 0 than end my trade with a very small gain most of the time. Because if I ended my trade at that 0, I'm going to have a much higher probability of actually capturing the entire move in Google to 105 or in AI to, you know, 2350, and I'll make significantly more that way in the long run. And that's how I will get those outsized winners that you need to have from the math perspective in order to be able to make more money than you lose in this business. So, little game planning comparison there. Only other things really on my radar for today, you know, were this path that ended up working out really well, and then actually Tesla to the long side. I flipped my thought process in the morning meeting today based on the fact that Tesla was getting above 186. The problem with Tesla, though, is that I thought that the execution off the open was very difficult. So I never really got involved. I guess here's another, actually, now I'm looking at it. Another great example of relative strength. Look at this third and fourth bar compared to the Qs and Amazon and Google and everything we were looking at. Qs are pulling back on bar 2, resting on bar 3, and shaking out on bar 4. Tesla's resting on bar 2, breaking out on bar 3, and resting on bar 4. It's incredible relative strength. You could have used this inside 5 and up here, and I actually remember seeing it now. You could have used this inside 5 and up for continuation. I don't love this trade unless there's news. If Tesla had stock-specific news, I'm much more open-minded to taking this pure momentum trade when the ADMA hasn't caught up, because that's really what this is. If you're buying the break of the inside 5 on the third bar, it is a pure momentum trade. The ADMA has not caught up. You have a much higher probability of a shakeout. So to mitigate the higher probability of a shakeout, I want to be able to have a news event that's putting the stock in play to be able to give me that continuation, which I don't think I had in Tesla. But yeah, Tesla from the thought process this morning was also great. All right, so that's all I got on my end. You know, Fed again tomorrow. I'm still thinking 25 basis points, but like I keep saying, I won't be entirely surprised if they don't hike at all, but I'm pretty sure it's going to be 25 basis points. But there's a ton of uncertainty going into this Fed meeting tomorrow, and when there's uncertainty going into the Fed meeting, it usually means that there's going to be bigger moves than there would be otherwise. When everyone knows what's going to happen, and what happens, and there's no unusual language or anything unusual or unexpected around the event at all, a lot of times you get a little bit of volatility and you don't get direction. when there's a lot more uncertainty coming into an event like we have tomorrow, that is a lot of times when you'll actually get much bigger moves. The thing about it, though, is I usually, and I was just saying this to someone offline, kind of into the close, I usually feel like I have a good feel for not only what the number is going to be, but how the market's going to react to it. And while I still think that it's most likely going to be 25 basis points, I'm not 100% certain about it, and I don't have the same degree of confidence on how the market would react to a certain thing, a certain event occurring than it would otherwise. But I'll think about it more tonight, and we'll see how that plays out tomorrow. All right, that is all I got. Yeah, I agree with you, Mark. That's all I got on my end. Let me scroll back up here for questions that I may have missed. Oh, man. The Kathy Wood headline is hysterical. Kathy Wood sees silver lining after bad run, $2 billion of losses. ARK can offset future capital gains taxes with fund losses. Nice. First thing I think I'm seeing is from Zahor. Isn't what you want, especially a broader market move like today, and the Russell IWM 2% up versus concentrated move in big cap or big tech as an overall gauge of market sentiment or movement? Yeah, so that's exactly what I want. It's exactly what I want. And what the point that I'm trying to make is on a percentage basis, I got what I want, but on an intraday basis, I did not. So on a percentage basis, I got the IWM up, 2+%. I got the Qs up 1.4%. On a percentage basis, I got what I want. On an intraday basis, I did not. Because at highs today, the IWM was up a couple percentage points while the Qs were only up 0.4%. So intraday today, the Qs outperformed the IWM. The IWM is only up more than the Qs are because of the gap. On an intraday basis, the Qs outperformed. Look, you can just see looking at the chart. Here's what the IWM did. It made highs at 10.10 with this little shooting star, sold off, and did nothing all day and went sideways. Look at what the Qs did. The Qs made a similar high at 10.10, at 10 o'clock, sold off a little bit, but didn't. But then, if the Qs did what the IWM did, the Qs would have closed it somewhere between 307.50 and 308. Instead, this got back up, broke out of this little sideways range that the IWM stayed in all day, and closed at new highs by a couple dollars. So IWM up more on a percentage basis. So that's why I said earlier I feel like I'm partially correct on my thought process. Yeah, I kind of got what I'm looking for. The IWM's up more than the Qs, but this is not what I wanted from an intraday perspective. I got no problem with the Qs going up the way that they did. I just wanted it to be in conjunction with the IWM doing that. If the IWM did what the Qs did, they would have broken the, I'm actually not sure if this tail is real. I look at it, but this 10 a.m. high, which is 177.75, and the IWM would have closed it, 179 and change today, and it didn't. It underperformed intraday. From Rex, at 9:45. This is what I spent a lot of time talking about, this down tick. SPYs and Qs tick lows, but Google, Amazon, and NVIDIA didn't. Amazon did, didn't it? Amazon did. NVIDIA, I don't know. NVIDIA also down ticked. I guess it didn't quite to new lows. So if I had to take these three stocks that you just mentioned and kind of put them in order of strength at this point, based off of that down tick, it'd be Google was number one. It did not down tick at all, right? Here's that 9:45 candle. Here is Google. It did not down tick at all. Next, second place would be NVIDIA. Down tick to the ADMA, but didn't break opening lows. Third place, actually, even though I liked it a lot, would be Amazon. Down ticked as well and ticked below opening lows. Let me read the rest of your question. Google is holding better than Amazon and NVIDIA because it held that inside 5 range, but would you still take NVIDIA Amazon trade? Yes. Since they also held the opening low. Even with Amazon breaking the opening low, I still liked it. And the 5-minute ADM may catch up. Yeah, this in Amazon is just basically like a continuation doji off the ADMA in a stock that was strong early on. So I don't care that it broke the opening low, to be honest with you. I don't care when a stock breaks its opening low if the ADMA hasn't caught up to the opening low. That's a rule. If the ADMA caught the opening low and now we're breaking lows, that's a problem. If the stock breaks the opening low but it's just touching the ADMA and the ADMA hadn't caught up to opening lows, I really don't care. The stock is still fine to me. So I think that answers that part of your question. Looks like you have a second question here. AMD, yeah. So the AMD was interesting, and we called out the shooting star at highs in AMD as a potential short. I wanted higher prices. I actually thought this was going to be one of those situations where you get the shooting star in AMD because it was so strong again this morning. I thought this was going to be one of those situations where you get the shooting star in AMD, it pulls back, but the pullback is super disappointing because the stock is so strong, and then you actually get a new high, get another level up, and then eventually you get that like second or third shooting star, which is where the stock completely fails. That's actually what I thought was going to happen. And when this thing was working its way up and it was at like 98.50 or something, I remember saying in the VTF, like, I love this as a short if it gets into like 101 and it's able to do it in a really quick, relatively quick period of time. And again, my thought process, and Rex, I feel like you like these counter trend trades, so I hope you're careful with them. My thought process always on these counter trend trades at the shooting star and AMD, I would rather miss the trade than be too early. That's what happened here. I saw the shooting star. I communicated it to you guys. I'm pretty sure I said you could short off that high. I didn't want that trade. I felt there was a chance that it was too early. Guess what? If I took it, I would have made a good amount of money. This thing, that's the high, and it 100% failed and became relatively weak from there. I am not upset at all that I didn't make any money in AMD today or that I didn't trade AMD. Because like I just said, I would rather miss the move like I did in AMD today than be too early when we're talking about counter trend trades. So let me read the rest of your question. AMD was relatively weak today after the morning push with the high volume and went red around 10:20 and consolidated where the market was still green. Do you think pressing short on 10:45 at the inside 5? Yeah, I really don't like it that much. I see the trade. You could try it. I really don't love it. Would be a good idea since the volume at the open trapped the buyers at the open, or do you think it's more luck when the market downticked to 1050? Yeah, look, there's a trade here that you could have taken. I see it. I see what you're talking about. I don't like it. I didn't like shorts today generally. I don't want to be fighting the market. The market's still strong. My expectation is more for a choppy day than anything else today. It's what time of the day is it here? It's 10:45. And the thing is down very small, but it's really just kind of in a range area here. This could easily downtick and uptick and downtick and do nothing for the rest of the day. So this is really not a trade that I'm crazy about. From Eric Miller, I traded Tesla and I placed my trailing stop at the 9:45 a.m. 5-minute candle. And you got stopped out. I'm curious to know what time you placed it there. It's a very tight trail. And I don't really consider this to be a pivot, to be honest with you. This is more like a very brief rest than a pivot. Did I properly set my stop here? So first of all, again, I would want to know what time you put the stop in. If you're telling me that, let's see, what's this low? That low is 180. That low is 190.22. So I need my ADMA to be at least 190.22. Where does the ADMA get to 190.22? Not yet. Not yet. On this candle. If you place the stop at that price any time before 10:10, I really don't like it. If you place the stop at 10:10 and you got pushed out immediately after, technically it sort of meets my rules, but I still don't love it. You would have to make the argument that this is a pivot, first of all, and I struggle to make that argument. This just seems like a very brief rest and continuation. At this point in my mind, the only pivot's the low of the day. Maybe you're using this low as kind of like an ignition bar low, like what I did with Rich earlier on AI. I could be fine with that as well, using the 940 low. Here, can you put your stop there if you waited at 10:10 to put it in? Yes, technically, but it's like so tight. So like this goes back to what I was saying earlier about game planning for reward maximization. If you want to throw a little bit of a stop at 10 a.m. at this low here, knowing that there's a very high probability that you're going to get pushed out of what is a strong stock, but you're fine with that because you want to just lock in a little extra profit, and you're not doing it for all of your position, I'm fine with that. To do that for 100% of your position, it really, it's too tight. It's going to be so hard for you to ever catch a move like what this did to 198 if you're trailing your 100% of your position like just that tight. So yeah, that's my feedback for you on it. From Dave S on UNG. Do you think we have a double bottom in that gas? Maybe. Did it break the low? What's this low? 714. What's this low? 716. Ideal double bottoms, the second low is slightly lower than the first low because it shakes people out. But I would also kind of even include the pre-market low in UNG from this day, which I think was like $7.01, if I remember correctly. I'm not 100% sure. Someone should confirm it. So could it be a double top? Sorry, double top. A double bottom, yes. You only have confirmation of a double bottom technically at this point if it gets above the March 3rd high of 1010. So at this point, I would say it is a potential double bottom. I'm going to actually be surprised if that's it at this point. That you do have some volume confirmation. You have this pickup in volume off that low. I would be surprised if they made nat gas this easy. To be honest, the commodity does not have a reputation for easy trading. And to give a perfect double bottom that doesn't shake out the first low like that, I'll be surprised if they make it that easy. But it's off to a good start. You got your equal lows, you got some increase in the volume, you closed on highs. It's off to a good start. So you got a potential double bottom there. What would I like to see for it to be confirmed? Well, again, technically, you only have confirmation on a break of $10, and then what you'd be looking for is a move to about 13. That's how technical double bottom works. What I would really want to see though is, like I said, actually an actual break of this low and snap back, because that's what happens in a lot of better double bottoms. They shake people out and then they go. You're telling me that nat gas went to $7.16 this UNG ETF and didn't shake these people out from this day? It just doesn't strike me as how nat gas trades. Scrolling through here. Awesome, Pam. Glad you're learning. From Riley, I actually took a short on Google off 105. Took a short on Google at 105. Okay, I mean, at that point, you got a ton of extension. It's into 105. I know Cody was saying he was looking at getting out of the position at that point. Had 10, 15-minute candles in a row. So, yeah, there's your extension. Took the short on the doji. Let's look at a 15-minute chart. Yeah, you got a little shooting star doji after an insane move in the 15-minute chart. I'm fine with it as a counter trend trade. Keep it tight. Like I said earlier, counter trend trades are tougher. I didn't like fighting the trend, but stocks don't move in a straight line. That's 100% accurate. I put my stop above the high of the day. I ended up moving my stop down to 104.45 to lock in final profit after the SPY broke back above 397.50. Okay, the other thing about counter trend trades, which is another reason why I don't love them, is that they're technically impossible to trail based on my trailing rules. The only way you can start trailing a counter trend trade is after it becomes a reversal, which is very hard to do based on my rules. So a lot of times when you're taking counter trend trades, that's why you want to be significantly more aggressive in your profit taking on counter trend trades, because most likely the trade will eventually fail because it's counter trend and the trend lasts longer than anybody expects, and you can't even trail it. So you want to just be much more ready to take profit when you get the move to that equilibrium area and much less greedy on a game plan. And as a rule, counter trend trades are going to be providing you a worse risk reward than a with trend trade. Rich, I only input transaction costs into my risk reward if the risk is less than 10 cents. And that's a rule I have also. I know I talked about this like a week ago. Let's use a couple of extreme examples, and let's just keep the numbers simple. Let's say that you take a trade that's got 2 cents risk, and your transaction costs are a penny in and a penny out. So really that's 4 cents. You just doubled your risk. Let's say that you're risking $1 on a trade, and it's, you know, a penny in and a penny out. It's $1.02. It's negligible the amount of risk that you're adding on. So at what point does, when you're thinking about getting break-even kicks and things like that, does the fact that you've got, you know, transaction costs actually matter? For me, it's around like it's basically like 9 cents is how I do it. And 9 cents and below, I input in some transaction costs into my one-to-one. Basically, if it's 9 cents or less, I always want to make at least 10 cents. And that's what I count as my one-to-one. If it's more than that, then I don't. Because at that point, especially with providing liquidity, which actually lowers your transaction costs, at that point, even for this trade, you know, yeah, I mean, look, this trade, what was the price that we got in? AI, you got in at 87 cents, I think you said, and we're giving it to 57 cents. You're taking 30 cents risk in this thing. At the end of the trade, if you book your one-to-one at 30 cents in the money, and then get stopped out, the loss, it's technically going to be red, but the loss is like very negligible for the amount of risk that you had on from a spacing perspective. And I would rather get the kick than not get the kick, because I was inputting in these extra costs into the, which also just complicates the entire thought process of the trade as well, because I'm trying to do very fast, simple mental math all the time with my trading. So so yeah, that's my feedback for you. From Kyle. Thank you for the in-depth review of Google. I learned a ton. Was just wondering, would today being a pre-Fed day being a potential reason to trail lighter? Yes. Yes, it would. Airbnb showed nice relative strength as well. Yeah, we had Airbnb 120 kind of on the list that one of you guys brought up, but it was very spready at the open. I don't know if, even though we're looking at it, I don't know if anybody got it. And I guess this was another one that was, yeah, very relatively strong here. The continuation. Yeah, 25. I mean, 25 basis points is what it is expected. So we'll see. Maybe at this point, because there's a percentage of the market that is pricing in less than 25 basis points, meaning no hike at all, that it's slightly bearish. So yeah, I can agree with that thought process, but I think that it's also going to be about the language that coincides with it. If we get 25 basis points, it's probably going to be more about the language in the press conference than 25 basis points. From Kosh, can you take a look at NVIDIA? Sure. Do you think I had entries in it after the inside bar at 1210, 1220, 1240. I hate this time of day. Yeah, I mean, you got an uptrend here, so maybe these worked to some degree. 1210 looks like it shakes out. 1220 shakes out. 1240 shakes out. 105 does not shake out. I don't like any of these trades. I didn't take it. I just need to make sure my analysis is correct. Is it okay to cheat, or would one wait for the inside bar to clear before entering? Also, the ideal out should be the low of the inside bar or the bar before. So look, technically this is like a trade. It's an inside 5 and up, and technically you can use either stop loss. Actually, you can use the inside bar or the bar before. If it's a trending stock and you're using an inside 5 as a continuation strategy, I prefer to use the actual pivot low. If it's a momentum trade, then I prefer to use the inside 5. Either is technically correct. But what you got to remember when you're looking at inside bars is that they are specifically an execution strategy for when you like other things. I promise if you execute every inside candle that you see in the marketplace, you will lose money in the long run. And that's what this looks like to me more than anything else. It looks like you're just finding every inside 5 and trying to transact on them. That's a great way to lose money. So that's my problem. The reason why I wouldn't take any of those that you just communicated is because none of the other layers of probability are there. My stock is not trending up. And don't try to tell me that this is an uptrend right here. If you think that this is an uptrend, you are way too microscopic in your thought process. This stock is relatively weak. It went red when the market was able to be green. It's sold off. It's bouncing. It's giving a 15-minute correction at this point in time. Really, right here, this is a coin toss on lower or higher. And if I had to guess, I probably would guess down, not up, when you're talking about these inside 5s that are occurring at 12.10 and 12.20. Probably a slightly higher probability of actually down than up at that point in time, because the stock was weak and it just bounced back to the equilibrium area. But the point here is you gotta like inside 5s or inside 15s or even inside days very specifically as an execution strategy for when you've got other layers of probability. Like the market's got to be on your side, the daily chart's got to be on your side. You really need to have very clear trend and momentum. They're really trend and momentum continuation execution strategies is what they are. And you don't have any of that. It's the middle of the day. The middle of the day is usually when the market becomes trendless and there is no momentum in the market. So when I'm trading inside 5s, it's usually a beginning of the day strategy for momentum continuation, like a 1-2-3 play, or trend continuation when the pivot is created via an inside bar, meaning you just got to use your imaginations. You got like a beautiful uptrend going on. The market has its pullback to the equilibrium area. You have a red Maribozu. The next candle is a green inside bar. That inside bar breaks up and you're breaking up to new highs. And then you have your higher low. And you executed that higher low via the inside 5 and up for trend continuation. So, I really appreciate the question. I think Pat answered Zach's question from Brian here. I was looking for second day action in PDD. Me too, but only because there was additional bad news. In PDD, after the bad news yesterday and the large move down, I took an entry today. This PDD at one point had me pulling my hair out. I took an entry today at the early intraday double top below 82. Okay. Which was close to the high from yesterday, sorta. Today it worked, but curious on the setup without hindsight. Yeah, so normally when you have the big earnings day move, whether it's a big gap down like in this case or a big gap up, I usually actually don't like trading those on the second day, because on the second day you oftentimes don't get as big of a move, or if you do, you're going after a day 2. Day 2s inherently have a worse risk reward and a lower probability of success than being involved in day 1, even though day 2s can certainly happen. Usually after the first day, what I really want to see is how the market digests the extension that came from that news event, in this case earnings report. So what I would want to see now, before I get back involved in PDD and look for further downside continuation or further upside continuation in the opposite scenario, is I want to see this ADMA on the daily chart actually catch up to the price action from the event and post-event. And then I can feel more confident that I can look for bigger picture continuation. That's normally Today, I would argue, was actually different, where maybe you could be a little bit more aggressive on the day two, because new bad news came out. New bad news came out that PDD is hacking the data and hacking the information of Android users. So if you're on an Android phone and you use Pinduo, Duo, or Temu, or any of the related apps that they have, if you're on Temu, it's probably because you like to purchase counterfeit goods, because that's what Temu is. It's basically a website for counterfeit goods, which is another reason why I really dislike this company and think that it's a short, on top of the fact that they are now being busted for hacking the data and personal information of anybody who has an Android phone. But that came out this morning that Google is banning them from their app store because they found out that the app is hacking everybody's data. So I was like beyond frustrated today that I'm long this JD, which is extended to the downside and is a decent company. And at one point this morning, I got PDD ripping higher as it's banned from the Google App Store, and JD up less and even down than PDD was. Eventually, it rectified itself, and at the end of the day here, JD is up 2.6%, and PDD is flat-ish, but it's flat-ish when all these other Chinese names, for the most part, had pretty good days. Alibaba is up 3.6% today. So I love the idea of being short this PDD. I'm actually upset that it did not have a bigger downside reaction off that news. Maybe the next ball can drop soon where, U.S. regulators recognize that this company is exclusively, through its Temu website, like the #1 spot for counterfeit goods, and, crack down on them a little bit further. But yeah, so for the most part, I don't love being involved in the day two, and I see your trade here. I think it's tricky. I would not characterize this as a double top. That's one thing I would say to you. A double top is a trend continuation trade. Sorry, a trend reversal trade. Excuse me. A double top is a trend reversal trade. That means that you have to be trending higher into the double top to then reverse. Like UNG. UNG is a double bottom. Look at the daily chart. UNG is trending down. A double bottom is a reversal pattern. They conceptually, and again, there should be logic behind understanding price action in the marketplace that creates technical analysis. You have more sellers than buyers. You have more supply than demand for nat gas. It's working its way down in price. It hits a point where buyers gain control over sellers and it bounces off of it. Within the confines of a downtrend, that's very normal. You get little spots where you get little bounces, and then the sellers kind of resume at those higher prices. So you get a bounce. Sometimes that bounce is a little bit bigger than it should be otherwise, which is kind of what's happening here. And then what should happen next is new lows. Sellers regain control, and they drive this down to new lows, so you get further trend continuation. And then instead of having new lows, your buyers in this case, they come in and they support the stock again at that same price. So they create support. And this, at this time, the technical term to describe what UNG right now is a challenged downtrend. It is still technically in a downtrend. But you got to ask yourself, why didn't it make new lows today? Why was it able to have this great bounce off that same low? So buyers are coming in and they're really making a stand here. So they're challenging the downtrend. So this is what's called a challenged downtrend. And that can lead to a double bottom, and confirmation would actually occur above the March 3rd high. When you're looking at PDD on an intraday basis, because these chart patterns can apply at any time frame, there should be an uptrend if this is going to be a double top. And then you get your high, and then you get your low, and then there should be a higher high, but sellers come in and they challenge that uptrend by creating equal highs, and then you get a breakdown in the midpoint and you have a break of the double top. So this is technically not a double top. Maybe you could make an argument that there's just resistance here, and you're shorting off this resistance, which is the space between this earlier high of 81.65 and yesterday's high of 82.81. That's more of a resistance trade than an actual double top. So I I don't love the trade for a couple of reasons. One is it's a day 2, but again, there was new news, so it's okay. And then 2 is I actually don't love the technical portion of the entry unless you're just super biased against the company like I am, and you're just like, you know what, there's broadly resistance here, and I'm shorting because this company sucks. So I hope that helps, Brian. From Tate, a bit sick, so spotty on the chat. Yeah, I'm a bit sick too. Did you get out of SIVB? I still can't get out. There's no market. There's no market for me to get out. No one's come in and bought the company. The government is like not letting people buy the company, so I'm still trapped in this. I am assuming that I am taking the full brunt of the value of my loss. Oh, does it show flat in my positions? That's interesting. So that's actually really interesting. I don't know how the virtual trading floor in the position monitor comes up with the positions that are in that monitor, because it's still in my position window on my light speed. But I know that the risk management team at T3 today zeroed out anybody who's in SIVB and the other one, SN, whatever that one was. Yeah, so I'm long SIVB in my light speed, but they flattened it out from a risk perspective on the back end today. So I would assume that means that the virtual trading floor is actually taking my positions not from my light speed, but from the back end risk. So what they did from a risk perspective for anybody who's with T3 at this point is they zeroed everybody out. So my prop reports as an example, even though I still get the insult of having to stare at this position every day on my light speed, my prop reports shows SIVB as a loss of the full value of the position at this point and the subsequent hit to my account. So that's fun. That's fun. I keep hoping that there's some value there for a buyout, but the Fed, the government keeps not allowing it, which is so ridiculous to me. If somebody wants to buy the damn bank, let them buy the damn bank. From Mr. Coffee, I do okay scalping, but when I try for longer day trades, your style of trading, I often fall back into old habits. I make snap decisions. No, don't do that. For entries and exits, that's not my approach. If anything, but being a little slower and wider and looking for bigger moves, I'm able to do the opposite. I make much more snap decisions that lead to me taking excess losses and lead to me making more mistakes when I'm doing faster scalping type of trading, because it's so much faster. I took the profits, but then I have to get back in. On good days, I make money but have high fees. Yeah, it seems backwards to me. On bad days, and look, when it comes to fees, and I would just want to say this because it's gotten brought up a couple of times in this afternoon meeting, transaction costs are the cost of doing business. I don't look at mine. I don't ever look at my gross P&L. My gross P&L does not matter. I trade a boatload of stock. I pay interest on overnights every day. I do not look at my gross P&L. Every once in a while, I look just to make sure that things are accurate. That I'm being rebated properly for providing liquidity and stuff like that. But outside of that, I do not look at the millions of dollars that I have spent over the course of my career on interest and transaction costs and everything else. But it doesn't matter. If a trade is worth taking, it's worth the cost of the opportunity. And there is no such thing as free trading. You're either paying a commission because you have direct market access, or you're having your orders sold out from underneath you. Personally, I'd rather pay the commission. With that said, you want to avoid churning, because churning is wasting transaction costs, but it's also wasting pure raw P&L. Do not churn your account. Make sure that your strategy is appropriate. Again, it just goes back to the same statement that I was saying. If a trade is worth taking, it's worth the cost of admission. And if the trade's not worth taking, then it's not worth the cost of admission, and you shouldn't be in anyway. But on bad days, I'm missing opportunities and I'm trapping myself up. The impulse to protect profits is killing me. Any words of wisdom on how to look at the bigger picture? Yeah, this entirely sounds like a game planning issue to me that you have. The key to countering impulsive, emotional, reaction-based decisions with your trading is to have strong game plans in place. If you have a strong game plan in place, you're following the game plan. If your game plan says that you're supposed to give back a certain amount of P&L because you're implementing a trailing stop, then do it. Your P&L on your screen, and I haven't said this in a while, but I should say it because it's a very important concept. The P&L that you see on your screen is extremely deceptive and can lead to you making bad decisions. Your P&L that you see on your screen is not your P&L. What your P&L truly is your worst case scenario P&L. If your P&L says that you're up $10,000, but every position that you have open goes against you and stops you out, whether it's a trailing stop or otherwise, and you end up in the day up $5,000, you are never up $10,000. You are only ever up $5,000. You need to know what the worst case scenario number is, and you need to be comfortable with it. And this is actually a problem that traders have when it comes to reward maximization. You will not be able to maximize reward if you are not willing to give back open profits. And my thought process for my own trading has always been basically the following. I hate risk, which sounds so crazy. I'm a professional trader. I take risk all day. I'm a professional risk taker. I hate risk. When I first pressed the button, when I bought AI today, or GDX today, and there's a chance that I'm just wrong, and the thing goes against me and stops me out, and I lose some of my hard-earned money, I hate that. I hate that. And I'm very careful with it. But I'm very much the opposite on positions that are making me money. Like, if Roku ever comes back down, and I mentioned this in an afternoon meeting recently on what I'm doing with my Roku strategy, you know, or an even better example is actually Shopify, which I'll get back in if it pulls in again. You know, my average price in Shopify, if I in my mind continue the same trade, but I start buying stock right now. My game plan is really to start buying stock at $43. I can hold Shopify before I'm break even down to actually like $18 or something like that, but below the all-time low of the stock because of how much profit I gained in here and what the game plan would be on buying back that stock. I am willing to risk tens of thousands of dollars of open P&L to make significantly more. I am not willing to risk tens of thousands of dollars of P&L on just open losses, even though that's what's happening in SIVB. So I have that opposite mentality almost of what you're talking about, because I recognize that the key to making really big profits is to risk money that you've already made in order to make more. So I hope that helps. Josh was saying that on April 3rd, SIVB is supposed to go onto the pink sheets. I haven't confirmed that information. From Noah, your apparent mindset about the SIVB situation and ability to trade mindfully almost immediately after is extremely impressive and explains a lot why you're so successful, setting a great example. I really appreciate that compliment, because that mindset that I'm having towards this SIVB to take the loss at the size that I'm taking on it is, you know, it's not easy, and at many earlier stages of my career, I probably wouldn't be handling it as well as I am. It certainly helps them having a fantastic 2023. So even though it's a 6-figure loss, I'm not giving back my entire year. But it still sucks. Yeah, I mean, look, this is going to probably be the biggest individual loss I've ever had if it's a 0, but I've had other big losses in my career. I've made other mistakes in my career, and what I've recognized, and again, this probably has taken me 10 years of trading to get to this point, is that I know what my edge is in the market. It sucks that this happened. It really does. It will take me time to be able to make that money back. But I know what my edge is in the market, and that all I need to do to be able to make money in this business, all I need to do is just do the right things consistently over time. And if I do the right things consistently over time, I know that I will make money. I know that I will eventually make that loss back. It may take me months, but it'll be there. If I let it infect my brain, where all of a sudden I start doing all the wrong things, then I ruin my year. So I just can't do that. And I even remember, because it's like a joke to me, this damn PACW, that day that it got to 5 here, I think I joked out loud, oh, I should just buy the dollar amount of stock that I have in SIVB in PACW, and if it can just snap back from $5 to $10, I'll make the whole loss back. And that was a joke, because I would never do that. That's exactly what I'm talking about your way to, I take the loss in stride, I move on, I focus on my edge, and I make my money back, or I let it ruin my entire year. The funny part is, if I did that, I would have made the entire loss back, but it's not the right thing to do. I'm putting myself in the position to not only ruin my year, but blow up my account if I do that, right? Even though it actually would have worked. But, what can you do? All you can do in this business is the right thing consistently over time. And no, I really appreciate the compliment, because, maybe I should do a video specifically on it or something like that. But as I kind of look back on it, and I'm still annoyed, because I still really want a buyout to happen. I want to get saved to any degree. I don't care if the buyout at this point is $1, $5, $10, $30. Give me anything that's not zero. Because in my brain, I've already rectified the entire loss, so it'd be nice to get that layup. But I'm trying to move on. But like I said earlier, I still have to look at it on my light speed every day. From Jackie, not sure if you can answer this, but do you pay the same commissions as entry-level traders at T3? I can answer it broadly. Commissions are on a scale in this business, and if you're an entry-level trader, you're with a small account, you're probably starting at the high end of the scale, but there is room to go down if you are a high volume trader. So this business works with economies of scale. So if you trade more, I probably, and I don't know what your commission rate is, I probably pay a lower commission rate than you, but I probably pay more in commissions than you, if that makes sense. And that's how that works, because it's economies of scale. So if you're a trader and you're doing 1 million shares a month versus a trader that's doing 50,000 shares a month, the person who's doing the 1 million shares a month is going to have a lower cost basis per trade, but will actually be paying more in commissions overall, but they're able to get some degree of economies of scale from the increase in volume that they do. I do not have, but what I can tell you is that my commission is in the same range as everybody else. I don't have a special commission cost because of the role that I have in the company. If anything, I actually might have a slightly worse commission than I should, because of the role in my company, in the company. From Kyle, sorry for the late question, but as a newer professional trader with a smaller account, do you have any psychological advice for dealing with monthly costs? Yeah, so we keep going back. We're really nailing the cost commission thing today. I'm just going to circle back to what I said earlier. I do not look at transaction costs on my own trading. It's pointless. It's pointless. It doesn't matter. It doesn't matter what your gross P&L is. All that matters in this business is what your net P&L is. If there is a trade that's worth taking, it is worth the cost of admission. It is worth the transaction cost. If the trade is not worth taking, well, then the trade's not worth taking, and the transaction cost doesn't actually matter. So I don't look at my gross P&L numbers ever. I really don't. Occasionally I'm curious to see, this is the only thing I actually ever look at. Occasionally I'm curious to see how much at the end of a month I got rebated for from the ECNs for providing liquidity. I occasionally want to see what that number is, just out of curiosity. But I don't ever look at my gross P&L. Back to NVIDIA. Kosh A talked about earlier. Would you say it had a better probability to enter a long trade at 2:30 p.m. as NVIDIA was back above the 15:30 minute 8:21 EMA, holding the opening low, and the keys are still trending up? Maybe a little bit. I mean, yes, it's definitely better than here when it was at noon, which is a worse time of the day than 2:30, and this was just a retracement up in a stock that broke down. At least at 2:30, you have a little bit of a more established trend in a better time of day. I still don't love it. Because now it's 2:30 on the day before a Fed, etc. Yeah, thanks, Anthony. Anthony giving me a compliment about trailing and stuff, and reward maximization. Look, guys, I can't tell you. It's the key to the business. Almost every trader, they have their psychological hang-ups, and they're based on one of two things. They either don't manage risk properly or they don't manage reward properly. For most people, it's risk. But what you got to remember, and this is what I always encourage people to do this. On a weekend, on a Friday night, when you don't have light speed up at all, you're not thinking about the trading day, pull up a spreadsheet, a blank spreadsheet, and just start playing with numbers. Play with numbers on game planning, on, that could be over multiple days, it could be intraday, it could be a trade. Actually play with the numbers. You need to have an understanding of the fundamentals of how the math in this business works in order to be able to be consistently profitable. Because every single time I see a trader who is not successful in this business, it comes down to one of two things. Every time. They either didn't manage their risk properly, the losses are too big, or they didn't manage reward properly, the wins aren't big enough. Every single time. So why do we do that to ourselves? It's definitely psychological. We have a natural, all of us, I think just as being a human being, have a natural inclination to want to not get out of their losers. Because you want to believe in your idea, you want to believe that it can turn around. And then as soon as that they see that they're making some money, they want to take the money and run because it's right there and they can have it. And that natural psychology is counter to successful trading. And the only way that you can counter psychology is through knowledge. And the only way that you're going to really have knowledge is by really understanding the numbers. I say it all the time. Trading is as simple and as difficult as making more money than you lose. But you will never make more money than you lose if you don't follow these basic math principles that enable you to do that. And there's a bunch of different ways in which you can work. So play with the numbers. But you got to you really want to take a hard look at that. Whew. Thanks, Rich N. Appreciate you. Convo with Tesla semi-trucks. Yeah, Bill, 100%. It would not have worked. 100%. Over on the YouTube for Sebastian, what do you think of buying Airbnb through 120 today? It had yeah, that was actually one of the trades on our radar today. It was just very spready off the open, so it was difficult to get stock. But if you could get it, I really liked it. From Turbine, any thoughts of pickup in Rivian and Lucid? Maybe. Let's take a look at Lucid real quick. Yeah, they both had decent upticks today. So look, when it comes to these companies, when it comes to Rivian, I don't think anyone can tell you what price the stock should be trading at. And, I definitely use some air quotes there. Should the stock be at 38? Should it be at 24? Should it be at 13? Should it be at 0? This company is going to lose incredible amounts of money over the course. I don't think that their plan to profitability is even. I don't think that they plan to be profitable until like 2030 or something like that. No company should be able to survive the billions and billions of dollars that Rivian is planning on losing over the course of the next several years on top of the money that they've already lost. So, can the stock go up? Sure. Can the stock eventually survive to 2035 and be a super profitable company? Sure. It absolutely can. It entirely hinders on the degree of the midlife crisis of Jeff Bezos, who wants to come in and compete with Elon Musk on electric vehicles and get involved in this. That's entirely what it depends on. So I have no idea where this stock belongs. So can it bounce? Could there be a pickup here? Sure. But I can tell you the way that I would trade this. I'm not afraid to go long Rivian. I'm not afraid to go long Lucid. I actually did really well. I was long Lucid, I think, back in here in mid-January. The only way I really like to trade these is to buy them high to sell them higher. Let the momentum come to you. Don't catch a falling knife on this. So this actually would have been a good day to get involved in them. Rivian threw some resistance here at like Lucid threw some resistance at 790. Rivian threw some, a little bit of a mess. Rivian still looks like garbage. Maybe Rivian if it can get back below 14. What do I think about long Foot Locker at 950 on a 1 minute chart? Well, I can't even. So I don't like it. I can already tell you because I don't like 1 minute charts. I don't look at 1 minute charts. I don't even have access to a 1 minute chart to be able to look at it. I have a 2 minute chart. I basically never use that either. I just every once in a while will use it to reference a tick. So I can already tell you I don't like the trade. I don't like any trade that's based off a 1 minute chart. The time frame's too small. It's too easy to get shaken out of the position. I can look at it at 950 at that price on a 5 minute chart though. I'll give you a little bit of feedback. I can tell you I still don't really like it. Foot Locker got upgraded today, so that was on your side. But I do not like what the daily chart looks like, and I don't care that you're trading on a 1 minute chart. You're like, Derrick, why are you telling me you don't like the daily chart? I just told you to take a look at my trade that was based on a 1 minute chart. I think that all small time frame trades need to be based on what the big time frame is telling you. The big time frame is telling you this is garbage, this is sloppy. Upgraded today, sold off the earnings report yesterday. I think the guidance on the stock was garbage. You're potentially, you have this inside 5 and up though, so if you really want to force a trade, you could take the inside 5 and up from 945 into 950, which probably coincides with what you're seeing on the 1 minute. So, don't mean to hate all over your question, but I'm just giving you some honest feedback. Yep, from My Trading Psychology is the name of the game. No problem. From Flip T, SHF are screwed. I don't know what SHF is. Anyway, I think I got through everything. Ooh, long meeting, 5:40. Love it. That's because you guys had great questions, so I hope everyone was learning off those questions. I'm going to wrap up the meeting then. If you're watching on YouTube, hit the thumbs up button. I didn't sit here for an hour and a half for you to not hit the thumbs up button. So, have a great night, everybody. Tomorrow's going to be another wild one. Get your rest. I'll see you then.